Good morning, good afternoon, and good evening. It's another Friday, March 15, 8:42 p.m. Welcome to the latest episode. This is Mark Yu,
And this is Wawi Santos.
and welcome to episode
Hello.
124. Hello, guys. Welcome to Mark Yu and Wawi Show. So, just a disclosure, we're not registered financial advisors. We just like to take a look at the markets on a weekly basis to guide our investment in the stock market. So off we go. For those who are just tuning in for the first time, you are in for a treat. We have really good charts to show you in just a second. So we take a look at the market sentiments. Start with the AAII sentiments, what the investors. So Wawi, we've been using American Association for the longest time since we started the podcast 2 years ago, and we're gonna add starting
Mhm.
this week the National Investing Advisors. So these are the fund managers survey. So these are the retail investors for the AII, but we're gonna take a look at the NAIM index as well, which is the sentiments for investment fund managers. So the professional side of things, just to keep a track on where the bullishness or bearishness is heading towards too. So for this week, as of the 13th of March, okay, bullishness dipped quite a bit from 51.7 to 45.9, and bearishness has maintained 21.9. Not so much of a movement. A little bit of an increase from bullish to neutral, as one would be able to observe on this one. Regardless, for the last 4 or 5 weeks, we have been above historical averages in terms of being bullish. So let's see. So this week's special question from AAII is, what is your perception of fourth quarter earnings? A lot of investors have answered they were better than I expected. And those were 46% or nearly half, and another 40% said they approximately match my expectations. So this kind of supports the bullishness of people because of the earnings performance of the S&P 500 and other publicly listed companies. So this is the one thing that we're going to start monitoring in the coming weeks and future episodes. So this is NAAIM number. It's an index for those who are fund managers, institutions. So as you can see, it's wonderful. They don't have the bullish, bearish, or neutral like the AAII. They do it differently. They just plot it in a graph. So one thing to
Mhm.
keep an eye on is like usually they go bullish as well when the market is nearing a top or increasing. But it could also backfire because if you sold, like for example, on February 8th, 2023, that was last year, on a peak with their index, the institutional managers, you would have avoided this dip right here from the S&P 500, but you would have missed the rally if it's, you're just basing on this index alone. But if you keep an close eye as what we're gonna do now moving forward, um, the lowest point usually is in the 40s or even lower than that, 20s. That's severe. This was during 2022 when the Nasdaq and S&P 500 was always like falling each and every week, each and every day. It was a horrible year back in 2022, and we bounced in 2023. So nonetheless, looks like 40 is the magic point here. That's a good buying point. As you could see, S&P was 3,800, and that was kind of like the bottom during that period when they were at 40, and it just trended up from there, and the index kind of like shadowed it, or as a result, has increased. But whenever it reaches 100 points, so we haven't actually seen that for the past 2 years, only during December 22nd, 27th last year and July. So when we hit 100, so we hit the 100 back in July, soon thereafter, August on the market, it started hitting a peak and then it sold off until October. So that's kind of a good indicator. August, September, October. So 3 months of selling after we hit the 100 point optimism in the institutional managers index. So, and then it hit way low on the 24 points back in October. This is the bottom right here, right, Wawi? October of last year. It kind of mapped
Uh,
bottom on
it
the,
kind of precedes it. It kind of precedes the bottom of the S&P 500, looks like.
yes. And right now we actually touched the peak again at 100 points, but we didn't sold off. So that's the, it's not one for one here. It's not always a guaranteed top or peak. But right now, as of March 13 of the latest reading, we are 104.75. We are really high. Not only with the, a little bit less bullish retail investors, but we are high, all-time high with well, not all-time, maybe we have hit, but because it's kind of limited in terms of its date range, but it's been the highest for the last couple of years. So just a warning sign. Plus, the S&P 500 registered another record high. I think 17th so far this year. 17th week
I,
high.
I,
So that's
I think that's a good indicator, Mark. If we can start using this and we can see that it's predicting,
hmm,
you know, oversold uh, market, then
yep,
we could probably trend it.
for sure. One thing I would definitely take a look at is whenever it dips below 50 and definitely lower than what do you call this? The 40-point barrier. So well, it's a good index to keep an eye on. So we're gonna keep that in our weekly review. So
Mhm.
next, our fear and greed index. So we are still in the greed territory. So from 66 points last week, we are now 70 points, 4 points higher. And the market momentum, which we've been closely monitoring, it's still way up there compared to the 125-day moving average. So strong momentum, as was shared here by Bloomberg and bar charts as well. S&P 500 is enjoying its strongest momentum-driven rally since 2000, the strongest rally in momentum in 24 years. So hopefully the momentum train doesn't stop pretty soon, but there are still some fundamentals that's supporting this trend. The net new 52-week highs has been increasing all along, has been trending up. So as long as this kind of supports it, it means that it's not only the Magnificent Seven. Actually, Magnificent Seven is a coin term for the top seven companies in the world, but Apple has performed terrible this year. It actually, as we have talked about in our group, has what do you call that? Has hit the death cross just yesterday, which is a negative sign or a bearish sign. So, what are your thoughts on Apple, Huawei?
Well, I can't resist the temptation. I still bought it today at 171.
Yeah, yeah. I myself
Oh,
also am exposed in Apple, so I don't think it's going anywhere. It's one of the largest companies.
yeah, its largest market is China, so they had a downturn in their sales in China, obviously because of the current situation there.
Mhm.
Economic situation in China is not so good.
Yeah.
Anyway, China is a big country and Asia Pacific, and its market is global. So I'm seeing this company rise back. But the debt cross might lead to further declines in its share price. So just be careful. Don't do what I did. I just can't resist the temptation today.
It's not bad, who are us to predict the future, but it's good that we have conviction and we know the fundamentals behind the company. So it's harder to tell, harder to convince us to do otherwise. Also, part of the Magnificent Seven is Tesla. It's down 34%. It's past bear market territory.
Mm-hmm.
For those who are not aware, 20% is the bear market indicator, and it's now 34% down. It was at 248 at the start of the year, but right now it's 163. So a lot of money has been lost. Oh, paper loss probably for those who are holding, but not the Magnificent Seven for sure at this point.
Mm-hmm.
So besides the fact that we have seen some high-flying tech stocks, big companies falling this year, there are still new companies that are hitting one-year highs to support the overall momentum. So it's not that bad, really. McClelland volume also is kind of like supporting, it's still increasing. So a lot of investors are still actively buying and selling and not just selling. But one thing to keep an eye on is options. There are more people that are now buying put options. It's the highest since February, early February of this year. So just keep an eye out. It's still, a little less than zero point 0.8, but it's heading there. Um, will probably be on a little bit on the defensive side if should it pass through like this mark, the zero point 0.9. Because you could tell we bottomed the market last year around October, and people have been buying a lot of put options, a lot of protection during that time. So market volatility is, still below is still below 15 points for the past week. I think, let's see, the volatility for the past week, it's actually down 7.8%. So the sell-off, was it yesterday, Wawi, and everything was kind of red?
Yeah, Friday.
Oh,
Yeah,
today and yesterday, right? Thursday and Friday.
Thursday and Friday. Yeah,
Yeah, we closed negative today. Yeah, that's correct.
and Friday triple witching. So
Mm-hmm.
normally, and
True.
historically, the chart patterns so shows this type of patterns in March
Mm-hmm.
where it tend to trend down.
Yeah. Well, yeah, volatility is still down. Interestingly, I thought it was already up at this point. But look at that. For the past 5 days, S&P is still up 0.1% despite the sell-off. Very strong market.
Yeah, it
The
actually hit the 5200 mark that
it
Tom
did.
Lee was saying.
Oh, today?
Yeah,
Oh,
yeah, it hit the 5200 as far
man.
as I know.
Tom Lee, oh man. Amazing guy. Just stay bullish.
Hmm.
The Nasdaq volatility is also down for the past 5 days, 19.25. Um, let's take a look at Nasdaq. How did it do the past 5 days? Because it's been quite interesting. Yeah, it's down 0.49, not so much, but some people may have felt it if they're heavily exposed to Tesla, for sure.
Hmm.
And the MOVE index, which is the crucial gauge in monitoring the interest rate volatility in the US. It's actually down 7%, despite it ramping up yesterday. Because if you're going to take a look at the 10-year yield, it skyrocketed.
Hmm.
So it was a 4.07. Right now it's 4.30%. So quite a raise there for the past 5 days alone. In the inverted yield curve, whoever's still monitoring this, we are still negative for those who are interested.
Hmm.
Um, Barely moved, if anything. We were at negative 0.41. Right now we're at 0.42. So not a whole lot happening there. And next, we're just gonna take a look at the fund flows. Where is the money heading for the past 5 days? So this is as of this morning, Reuters data. Global equity funds draw big inflows. Wow. As investors eye central bank signals. So this is quite positive for those who are bullish. Global stocks saw inflows to March 13, as investors are focused on strong global stock performance. According to the data, LSEG, global equity saw a net 22.63 billion worth of inflows, the largest amount since the first week of February 2022. Wow. We haven't seen this large of an inflow since last year. So a
Mm.
lot of money piling in to the stock market when we are hitting what it feels like, according to institutional managers, is a peak. So a lot of money chasing, let's see what specific assets it is in terms of equity. So let's see. Mhm. So, according to the senior strategist at TD Securities, this comes alongside a broad-based cross-asset bull run. So he's categorizing this as a bull run, cross-asset bull run, with gold and Bitcoin garnering much attention as they yeah, we have talked about this in the previous recording.
Mm-hmm.
Actually, fund flows are flowing out of gold, but still it's increasing to all-time highs. Obviously, Bitcoin is receiving a lot of funds because of the ETFs. So regionally, European led the gains in inflows, 15 billion. And then US and Asia equity, US saw 4.9 billion, Asia saw 2.1. Here we go. Sectors. Technology funds receive 1 billion, marking the ninth consecutive week of inflows. So non-stop inflows to technology guys. Industrial and metal and mining sectors garnered. So industrial garnered 301 million. Metals and mining garnered 222 million. And then consumer discretionary. So we took a look who's leading the consumer discretionary. It's no other than Tesla. So consumer discretionary face outflows, 962 million flowing out of consumer discretionary. So a lot of money flowing out from the leaders, as we have just highlighted, 32% down since the start of the year on Tesla. But that doesn't mean that, Tesla can't surge higher, because gold just proven that that's possible. I think two
Mm-hmm.
months consecutive outflow and gold price still hit all-time highs. So it just depends on the sentiment. Here we go. Money market. So how's the money market doing? Remained high demand for third week in a row, $35.51 billion. So this is just kind of confusing. I guess people are still setting aside a lot of cash ready to buy, or they
Mm-hmm.
are just uh happy to get the money market. If I'm not mistaken, money market rates are still 5%.
Yes, and that's an attractive rate. You know,
Yeah,
it's similar to what I did recently. I just put a lot in my money market account waiting for a downturn.
yeah, look at that. 5.35, 5.33, All American Bank 5. It's all above 5%. So I think, yeah, that's a good move right there, Wawi. I think to seal the deal at 5% seems pretty safe, regardless
Mm-hmm.
what the stock market does at this point. So, as we have always been observing since the start of the year, the bond funds have been attracting a lot of money, continued their positive streaks. Another 7.27 billion flowed in, 12
Mm-hmm.
consecutive week of inflows. So medium term US dollar global corporate drew 2 billion. Okay, medium term US dollar bonds 2 billion. Global corporate 1.78 billion. Government bonds 475 million. So it's mostly medium term US dollar bonds and global corporate. So I guess people are still attracted to yields
Yes,
instead of the
and
stocks. Most
eh,
well, now there's tide turning. Mhm.
and somewhat protecting um, their holdings as well by putting it in bonds
True.
and money market. But what is interesting with your data right now is the increase in metal inflows, which kind of got into my radar because copper prices have gone up. So
Mhm.
I think that's a good sign.
Dr. Copper. Yeah, it's up 6% since the start of the year, so it's making a comeback.
It's a cyclical metal, so something you have to watch out for too if something is happening. Especially we're gearing towards more towards electrification.
Mhm.
If that starts pulling the market in that direction, copper should go up.
Yeah, well, it kind of also bounced from that October low,
Hmm.
and it's been holding up. Now it's above $4. So that's a good indicator, I guess. It's what they say, it kind of indicates what the strength of the economy is. So probably a good indicator as well.
Hmm.
Commodities, precious metal. So regardless the all-time highs in gold, precious metals saw outflows diminish to an 11-week, but still, it's an outflow, 122 million. And energy funds experienced their first weekly inflow in 3 weeks, 25 million, very minuscule in terms of fund flows, as well as
Hmm.
emerging market funds, not so much, $500 million, breaking a 4-week trend of outflows. So people are diving in, putting some money to work now, especially technology, as what we have just highlighted. Mhm. Let's see. I think this is the same thing. US stocks, US equity attract inflows for third week in a row. So yeah, we just talked about this one. Tech and financials attracted the biggest inflows. Uh-huh. Inflows to US bond funds slowed sharply to 3.8 billion from 10 billion the previous week. So yeah, money markets still attracted a lot of money, 24 billion. So here we go. Sector performance for the past 5 days. Top performing sector, energy. Those
Wow.
those guys who just put their money to energy this week are lucky. They're reaping some gains at this point. Energy is the top performing sector, followed by communication services and basic materials. The rest barely made any positive impact. Real estate is down a lot, 2.69. Worst performing sector, followed by healthcare and technology. So technology kind of giving up some gains here, Wawi.
Hmm. 1 month performance is still energy, so there might be something going on here.
Hmm.
Another rotational signal there if it continues to go up.
Very good observation there, Wawi. Energy, basic materials, financials, utilities. Those are
Hmm.
some of the sectors that have been punished last year heavily. But let's take a look at the year-to-date performance. Yeah, year-to-date, still technologies is still rocking. Financials. It's sort of unique for financials because you would be surprised how strong they are at this point, despite the New York Community Bank uh, near bankruptcy. Mnuchin saved the company, the bank. He had formed a several group of people that were able to lend the bank $1 billion,
Hmm.
and it
Hmm.
stabilized the system. Last year was JP Morgan who swallowed whole. What was the bank? I forgot.
Silicon Valley Bank, is that
I
it? I
think
think it
so, yeah.
swallowed that bank.
Yeah, but this year, if we didn't even feel the sell-off. I think the market has gotten immune to bank because they know that it's gonna be limited fallout. Right, Wami?
Yeah, they learned their lesson from the past, so um, they're good about protecting themselves now. But the controversy right now is in the Basel III, you know, deposit requirements for banks. They want a ratio of 8 to 2, I think, or like 20%. Uh, you know, um,
Higher buffer.
money, yeah, buffer, 20% buffer
No.
for the banks to have, and they're kind of uh, questioning that, and I think they filed a lawsuit to. to change that policy.
Hmm.
Well, we'll see how it goes. I know where the policy is coming from because they're trying to protect from a bank runoff
Yeah.
if something bad happens. But they think it's an overkill.
Hmm. All right. Before we go to Wawi's take, let's just take a look at the global index for credit and equity valuation, funding and volatility as a whole. Let's just see where we are at this point. So let's see, 1 week. Okay, we have loosened a little bit more in general. So we started the index at negative 1.83, the financial research stress index, which is, still negative. Anything that's negative is loose or money is freely available or almost free. And right now we ended in March 13, the last survey this week, at negative 2.03. So if you're
Mhm.
gonna remember last week, we kind of increased tightness, but right now we're back to negative 2.03. So not a whole lot of issues, not a whole lot of bankruptcies happening or turmoil in the markets. So we're just gonna rule out United States. We're just gonna look at United States here. So negative 1.09 last week for United States, and right now more negative 1.16. So much looser in terms of not so much turmoil happening, like volatility index has shown, and the market relatively is flat to negative. So all right, despite the sentiments, we are sort of like still in a good area, positive side of things. Although institutional managers are getting really bullish at this
Mhm.
point, their exposure has really risen. So now, this week's Wawi Steak, what do you have for us, Wawi?
Well, for you people, I would like us to look at Palantir, which is what we've been discussing tonight on our group.
Mm-hmm.
Peter Thiel just sold some of his shares, and you know how some people feel when the big guys start selling their shares. Um, but knowing, that man, from what we know, reading about him, he's a serial entrepreneur, just like uh, Elon Musk. So he's
Mm-hmm.
probably doing some other project here. Who knows?
Yeah, yeah. He probably is, setting aside. He probably still has a lot of share exposure. So Palantir, so this is just from Seeking Alpha. Um, let's take a look if I can try to remove this bar here. Oh, not that one. Okay, we'll just make sure that. So for the year, Palantir, it's up 36.8%, $23 a share, market cap of $54 billion. Forward price to earning, wow, it's pretty pricey right now. 74.8 times earnings forecast for next year. So that's a quite high point at this time. Financials, let's take a look at the financials. So 2019, it was just generating barely $743 million. And look at it, at December 2023, it's 2.25 billion. So business has grown.
Hmm.
Company knows how to make profits. And
Well,
yes,
it has government contracts.
mhm, from negative $500 million 2019, it now has generated 120 million in profits. So operating income. So let's take a look at this net profit. Okay, net profit is improved 209.8 million. So company is able to make profit at this point. Let's take a look at its balance sheet. Cash is around 3.6 billion in cash. And you can tell it's generating money. Its cash was around 1 billion back in 2019, and 2 billion during the pandemic, 2.5 2021, 2.6 2022, 3.6. So this company is raking in cash, unless it's taking a lot of debt. Let's see. Total debt at right now is 229 million. This company is cash flow generating positively. From 396 million debt in 2019, now it's 230 million in debt. So they're good. They're cash flowing, strong cash flow, good operations, doesn't need debt. Let's see if they issue a lot of stock. Not really. I think they listed their shares back in 2020. So yeah, they're pretty good. Wawi, solid company. Just that their valuation at this point is, oh wow, it's pretty high there. Right now, trailing 97 times earnings. This kind of reminds me of Netflix at one point, or Amazon even. And then the forward is 75 times. Look at the grade Seeking Alpha is giving them. D minus F, a failing mark. Um,
Well, if you look back just a few years, this its valuation is way higher.
mhm,
And I took this opportunity to make this my entry point into Palantir, seeing that it's lower than what it was a couple of years ago.
right. Peg
With
ratio.
yeah,
Okay.
with actual profits coming in from the government and with its new artificial intelligence platform that is customized for its customers is amazing. So it's getting a lot of interest in its AIP. So we'll see. Um,
Yeah. Well, just to
uh,
look, peg ratio
it's
here, it's 1.58. So it just kind of remind me of Peter Lynch. Like he says, a peg ratio of one means that stock is reasonably priced or fairly priced. So that's one way
mhm.
to look at in terms of growth, future growth. So it's still a little bit pricey, but yeah, go ahead, Wami. Sorry about that.
No. Yeah, we'll see. I know it's have a lot of competitors, but this is what the Q4 conference call statement from Revenue Officer Ryan Taylor said. I've never before seen the level of customer enthusiasm and demand that we are currently seeing from AIP in US commercial.
Mm,
So that's what they're trying to do. They're trying to get into that artificial intelligence platform like everyone else.
yeah. AI. But we just saw quite a correction today from Adobe too, one of the early pioneers of AI. It's down
Hmm.
14% today after announcing its earnings. I think after not met expectations from Wall Street. But yeah, peers of Palantir's Autodesk, we have Atlassian, all of them close to 50 billion price point. Roper Technologies 58 billion. But the best performing sector for the year obviously is Palantir. Autodesk is 4.4, and then Roper barely made to positive territory at zero point 0.4, and then Datadog is down. DASTY. What is DASTY? I don't know.
Which
Dust.
makes me think that this is probably Palantir's price discovery
Mhm.
again.
Could be, yes. All right,
Part two.
part two. Well, what's the other? Do you have another take on us today? To share?
Yeah, also here in my area, I'm seeing a lot of Dutch bros popping up like mushrooms. They're
It's like a
they're
coffee
this
chain.
yeah, they're this coffee shop. I go there and they do have good products. They even have boba. And I think we may have discussed this before in
Uh-huh.
our other shows, but again, I'm putting Dutch Bros out there. It's another one of those that's probably high in its price, but it's really growing.
Hmm.
They're
Dutch
just
Pro.
popping Dutch Bros popping up like mushrooms.
Yeah, it's a $33 a share, or almost 34 at this point. Forward price to earnings 104 times. Very expensive right now. 6 billion and market cap. Let's take a look quickly at this financials. Back in 2019, it only generated only 238. That's a lot. But right now, not December, almost $1 billion in sales, coffee sales looks like. And they're profitable. Look at that. Operating profit, net profit. Ooh, just $1 million. $1.7 million. So a lot of expenses in Dutch Bros. They are paying a lot, honestly, to their minority interest shareholders. 8.2 million, almost all of their profits. So if you're
Mm.
buying it stock, you're just a little minority and they're it's good that it's 10 million here. It's easy to get the percentage. So minority interest shareholders or big shareholders in this case owns 82% of the company. So as a
Wow.
result, 1.7 goes to the retail shareholders. Let's take a look at this balance sheet quick because we have less than 2.5 minutes to go. Its cash is around 135 million compared to barely 16 million 5 years ago. And its debt is around, a lot of debt. $676 million in debt. That's a whole lot of debt. 6 times your cash. So I'm pretty sure they're taking more debt to expand at this point. Yeah, a lot of capital expenditures. They're definitely building Wawi. Their only operations cash from operations is 140. They're investing 229 million to
Hmm.
expand in just 1 year. So
Very aggressive.
they're issuing a lot of stock, which is not very attractive. They're also issuing a lot of debt. Well, not a lot, but a lot of stock this year. Last year, a lot of debt, not a whole lot of stocks. So they're kind of balancing it out. They dilute their shareholders one year, they take more debt the following year. So it's just interesting. Good take, Wally. Oh, let's just take a look at its peers. Shake Shack is the closest one, 4 billion, and Aramark, Wendy's, 3.75 billion. So it's actually larger now than Shake Shack and Wendy's. So I'm kind of like worried of this company at this. Shake Shack is actually up 40% this year. Wow. And then Aramark is 10%, Dutch Bros is 7%. All right. Wow. Pretty good find there. A couple of contrasting finds. One is rich in cash flow generation, the other is not so much. All right, well, I think we have less than 40 seconds to go. Listeners, thank you for tuning in with us. It's been a pleasant week. Thank you guys. Again, this is Mark Hughes signing out.
Wawi Santos signing out. Like and subscribe, guys.